All right. We are here. How are you, Andy?
Oh, I'm doing great. Thanks for having me on your show, man. I appreciate it.
Thanks for coming through. So I'm super stoked to have this interview with you. Been wanting to do this for a long time. Took me forever to get the equipment and everything else. I guess before we begin, for anyone listening / watching, do you want to give a brief introduction of yourself?
Yeah, sure. I'm just a normal dude. I guess. I grew up in Northern Virginia my whole life. I went to school, college, graduated, and started working as an electrical engineer. And then I recently quit that.
Did you?
Yeah, to go full time into crypto.
Really? That's all. I didn't know that.
So my main cushion is from crypto because I invested. So actually, when it was back in 2017, I put pretty much everything I was earning into the crypto world, and it was a scary time because I was living like basically paycheck to paycheck, even though I was living in my parents' home.
It's probably the best time
like
to,
every
to
day,
do it,
do something crypto related. So that's pretty much pretty much it for me.
That is awesome.
So I'm just living the life right now.
That's fucking awesome. So that makes the topic of today you're definitely a good person to talk to about it then, because I
hope so.
We talked about this before the cameras were on, but I did want to ask you about crypto and some theories, ideas, whatever you want to call it, that we talked about months ago. I guess I do want to start because I feel like crypto is super new for a lot of people, myself included.
It's definitely new for millennials, and then
Yeah,
definitely a hot topic for sure right now.
Yeah. I guess for anyone watching or listening, could you, I guess, give a general, first definition of crypto itself, and then I know blockchain is, to my knowledge at least, a part of how, I guess, what makes crypto unique.
Yeah, sure. So I consider cryptocurrencies. I mean, everybody knows what cryptocurrencies is nowadays, like Dogecoin and all these coins, right? I consider those kind of like applications that were invented on the blockchain. So in order to understand everything, I think it's important to get familiar with how blockchain works. And that's basically a decentralized ledger that's open to the public, and it's immutable because of the way the code is written for that, for Bitcoin blockchain at least.
Okay.
And so blockchain, it's a network that's monitored by a bunch of nodes, and these nodes are actually called miners too. So these miners are the ones doing the work, monitoring all the transactions that's happening in the network.
Okay.
And the reason why a blockchain is probably the most secure network is because all the nodes or all the miners monitoring and running this network, they all have a copy or a ledger of every transaction that's going on. So each node has the same exact copy. That's why it's immutable, because if a hacker tries to get into a node and changes the transactions that are stored on the network, all the other miners and the nodes know that specific node has been compromised.
Okay.
And so they can either block that node out or notify all the nodes, hey, that's a bad actor right there.
Okay.
Let's try and get rid of it, or just ignore them.
Okay.
So that's why it's so secure. That's because you have thousands of miners monitoring the network.
Well, that is interesting.
Does that make sense?
Yeah, I think at least I get it. I get the idea of it. When you say miner,
It's a very deep topic.
Yeah, no, I mean
Sure.
it's fascinating though. When you say miner, is this because I remember Bitcoin, I guess to my knowledge at least, is the first crypto, or maybe the first popular crypto?
It's definitely I think it is the first cryptocurrency labeled as cryptocurrency. I'm pretty sure there were other forms of digital currency out there, like on different, malicious sites.
In the dark web.
Yeah, in the dark web. But it is definitely the first public known, it's the first known currency known to the public.
Okay.
Based off the blockchain.
So how do you said miners, are these just like people, like just random people that take it upon themselves?
So for Bitcoin, for example, all the miners can be you and me, or it can be a company that has a bunch of hardware to be able to mine.
Okay.
To help mine and help secure the network. And basically, it's just like a computer, and you download software on it, and that code will help you verify transactions and help run the network. So basically, anybody can become a miner. You just have to copy the database that's synonymous with every other node in the network.
Okay.
Does that make sense?
It does. I'm just thinking about like if I sound really dumb for asking these questions.
Oh no, you can ask whatever you want.
Is being a miner almost like is it similar to a job in the sense that this is someone who's actively monitoring something, or is the software, I guess, doing a lot of the legwork?
So the software is definitely doing a lot of the legwork. What you might have to do is buy different computer components to build the hardware rig in order to mine. Or you can buy a pre-built one off of eBay or different. There's something called ant miners.
Ant miners?
Yeah, it's a company in China, I think, and they pre-build this hardware for mining, and they sell that out at a premium, of course, because they're building it for you. But basically, the software does everything for you. There's definitely instructions online you can follow, and it's basically passive income. It's passive income. You get paid every transaction that you help verify. You get paid out, and that's the reason why it adds security. Because the more nodes you have, the more secure the blockchain is. And how do you onboard more miners? You give them an incentive, and that incentive is every time they finish a transaction, you get paid out in Bitcoin.
Okay.
So the miners get paid out consistently in Bitcoin, and that's why even though the max supply cap for Bitcoin, there's 21 million coins, but currently there's only like what I don't remember the exact number, but I think like 15 to 18 million in circulation right now.
Bitcoin in circulation.
Yeah, on the network.
Okay.
So so that's how they add security, is because you incentivize more miners to come, or more people to come become miners. And the reason why more nodes equal more security is because let's say you own a majority of the nodes. You can actually change, because you own the majority of the nodes, you're able to effectively take over the network. So if I own 51% of the network, I can change 51% of the node's database or the ledger, and the other 49% won't be able to do anything about it because I own 51%. I own the majority.
Okay, yeah, that makes sense.
So that's why you might have heard something called 51% attack.
What is it? 51%.
51% attack on blockchain.
No.
So that's the whole reason why they call it 51% attack. But the cost of owning 51% of the
Bitcoin.
network is very, very big. It costs a lot.
When you say network, this is like Bitcoin.
So if you own 51% of the miners or the mining rigs, if you own 51% of nodes,
okay,
you can basically take over the blockchain, change the ledger, or change every transaction on 51% of those nodes, and the other 49% have no choice but to
do whatever.
Yeah, whatever the
man.
majority has. That's why it's called. I think that's part of why it's decentralized, because you don't have a single entity controlling everything.
Okay.
You have the majority controlling the network.
That is interesting.
I can go further, but I don't want to like confuse anybody else. I think that's the easiest way to put it if you wanted to learn more. But there's a bunch of information out there on YouTube you can look at.
Yeah. I mean, I just started, like, when I say getting into it, not getting into it in the sense that I'm trading or buying it, anything like that. Getting into it as in trying to just understand conceptually how Bitcoin works, cryptocurrency works. I get it on like I guess super.
Yeah. I hope I'm explaining it well.
No, you are. Yeah. It's because some of the, like, I'd heard about miners, and I'd heard that, and maybe hopefully I'm not saying this like incorrectly. I heard there was a finite amount of Bitcoin, which is kind of where the value sort of comes from, unlike fiat currency. And that miners slowly, I don't want to say create Bitcoin, but I guess find Bitcoin. Does that make sense?
Yeah, I mean, it's hard to explain that, because I think the best way to put it is they're being incentivized by being paid in Bitcoin to verify these transactions, and that's where the new Bitcoin comes in. Is these miners are getting paid in Bitcoin.
Okay. Yeah, I'm like literally picturing.
That's where the extra supply is coming from.
Okay.
So back in the day when Satoshi Nakamoto was the creator,
who is still unknown,
still
I think.
unknown, yeah. Definitely still unknown.
Side note, sorry to cut you off. I feel like I heard recently, I didn't look that deep into it, some guy claimed that he is it Nakamoto, Satoshi Nakamoto? And people were like, is it him? I don't know if it's him, because no one knows who he is. So they were like freaking out. They're like, maybe it is him. I don't know. I sense it's a guy just trying to capitalize off of the unknown.
So that's funny, because there's a guy in Japan actually named Nakamoto. Everybody thought he was. He was like, it was a huge thing.
What did he say about this? Was he just like confused? He's like,
yeah, he was confused. He wanted the public to stop harassing him and stuff.
20 years from now, it actually
was like an old dude too. So it's like, poor man.
Joke's gonna be on us though. 20 years from now, it's gonna be like Squid Games, and it's actually gonna be him. And he was like, I planned it all from the start, and no one knew it was me.
But what was your question? What was your question again?
Oh
yeah, so the supply. So back in the day, so Bitcoin was created right when the financial crisis happened in 2008. That's the whole reason why he created Bitcoin and blockchain. Was because he was tired of the current centralized financial system. But I'll get into that later when we talk about theories and stuff. But yeah, it was created in 2008, and when he created the first node, he was getting thousands of Bitcoins per day as he was mining it on his own. And then other miners came into the picture, and so that as more miners come into the picture, it gets the supply gets diluted because it gets equally distributed. I think so. It gets distributed among the miners, depending on which miner finishes that transaction first.
Okay.
So there's actually competition in the nodes too, but I won't get into that because that's a little complicated. So I'll just say that every miner gets paid out in Bitcoin and gets distributed. But the supply that gets paid out to the miners gets halved every 4 years.
The supply that gets paid out to the miners gets halved every
4 years.
So as more miners come in, the amount is that what it is? The more amount they, I guess, keep gets decreased.
The new incoming supply of Bitcoin that they keep paid out gets halved. So if last year I was getting paid half of one Bitcoin for the year, for the past 4 years, I've been getting paid one Bitcoin as a miner. After the 4th year, the supply gets halved. So then I would get paid out instead of 0.5 Bitcoins per year for the next 4 years.
Okay.
And the reason why he did that is because he thought it would combat inflation. And
that makes sense.
I'm not sure what his mind was going through, whether he wanted to create a new technological innovation or if he was trying to combat inflation and kind of go away from the centralized financial system. But I think that's where Ethereum came in. Ethereum just create a whole bunch of new innovations and stuff.
What exactly is Ethereum compared to? It's just another cryptocurrency, right?
It's another big cryptocurrency, but it's different in that it adds something called smart contracts.
Smart contracts?
Smart contracts. So smart contracts are basically, so let's say, so you're a real estate agent. Let's say I'm looking for a house, right? So you're the intermediary between me and me buying a home or selling a home, right? And that in blockchain world, you would be basically the smart contract. So in the blockchain world, the smart contract is actually a code.
Okay.
That manages the agreement between two parties. And you can do a lot of things with that, like lending. Like if I want to lend out my crypto, I would have a smart contract. I would deposit my money in the smart contract. The smart contract would lend it out to somebody for an interest. But if something fails, the smart contract reverses itself.
Okay.
Because there's a disagreement between or if something wrong happened, there's a disagreement, or if it denies something between what you've agreed on, it gets reversed and you get your money back. And you're able to get your money back because every transaction is on the network. So, but that's also really, really deep.
It sounds like a more efficient way of kind of handling, like say in real life, I loan Johnny $50. Johnny says, I'll pay you back 60 in like 2 weeks. Then 2 weeks comes
that's
around.
exactly what it is.
And I can't find them.
Yeah.
So instead of that, the code is like, Johnny.
Yeah.
It rips him back. Here's his money back.
Yeah.
That sounds,
so that's like it adds to what Bitcoin already is.
So Bitcoin doesn't have these, really? Okay. Huh.
So Bitcoin does not have smart contracts. Right now, there are a lot of developers on Ethereum, and Bitcoin, there's not as much development going on compared to Ethereum and maybe some other networks as well.
Okay. So part of the value of Ethereum, I guess compared to Bitcoin, is it has a bit more utility, I guess?
I wouldn't say value, but maybe an extra plus.
Okay.
An extra advantage to Ethereum. Like they all have, Bitcoin has the disadvantage of Bitcoin is that it's not as innovative as Ethereum on the internet, but it has a better advantage of security because Bitcoin is so simple. There's not a lot of code involved in Bitcoin compared to Ethereum.
Okay.
And the more advanced, your code is, or the more code you have, the more vulnerabilities you have. And so there's a trade-off between the two. But Ethereum also runs on mining right now.
I was going to ask that. Okay.
So, but just on a different network. But currently they're moving to something called staking.
Staking?
Staking. So proof of work, you might hear the term, is essentially mining, hardware mining. Proof of stake is software mining. So in staking, instead of buying a hardware rig to mine the coins, you actually purchase coins, lock them up in your digital wallet, and that will automatically verify. That will act as a node and help verify your transactions. Okay. So let's say Ethereum I wanted to mine, right? Currently, if you want to run your own node, you need to have 32 Ethereum.
Okay.
You need to purchase 32 Ethereum, put in your digital wallet, and set up some software, additional software, and you will become a node.
Okay.
And so that's the initial capital of being able to stake. Is you, instead of purchasing hardware rig, you buy the coins and you lock it up. And that actually adds security as well, a different type of security, because if I wanted to hack a node or take over a network, I still have to buy a bunch of coins in order to become a node to get to do that 51% attack. You see what I'm saying? In order to I still have to buy a bunch of coins, lock it up, and then I can take over the network. But if you take over the others, and the extra thing is, if you're holding these tokens, why would you
sabotage yourself?
Yeah, why would you sabotage yourself?
Yeah.
Exactly.
Huh.
So that adds like a different layer of security.
Okay, that's interesting.
And a lot of people, I think, right now they look at, what can blockchain do, or they look at the price of these coins. But I think if you look deeper into the technology itself, like it opens a lot of, it opened my eyes a lot.
Yeah, just like the I guess utility behind blockchain itself and what it could do.
Yeah, utility, and just the fact that our legacy financial system is way behind.
Yes.
In my opinion.
I completely agree. Yeah. On a side note, kind of speaking about blockchain, this is related but slightly tangential. Did you see, it was maybe a month ago, I think it was like the UN, they said something to Elon Musk, or they sent him a message, something about if Elon Musk donated, I think like 8 billion or 6 billion, something like that, he could end world hunger.
Oh yeah.
And he
he
was like, if I do it, you need to like show exactly where your money's being spent.
Yeah, exactly.
And I thought about, from my basic, super basic understanding of blockchain, part of me was thinking, if we had blockchain, we could see exactly where they're spending their money.
It's so transparent. Like, so every time I make a transaction, I always open up. So there's different websites called like Block Explorer or ETH Explorer.
Mm-hmm.
And on those websites, you can see every single transaction that's happening. And
really?
So every individual, they have a wallet. And that wallet is tied to an address. And it looks like a hexadecimal number. So it's like 0x4e5. It's like it's a string of digits, your wallet. And that's your address. So if I were to go into that website, Block Explorer, and type in my wallet address, you can see everything that I own. You just won't know. Well, because I told you it's my wallet, you'll know it belongs to me. So it's open. But nobody is able to get into your wallet because you own the private keys for your wallet.
Okay.
And the private keys are essentially just a password to your wallet.
Okay. So I'm picturing like someone knows Jeff Bezos's address and his
you can
password.
See exactly, yeah.
You can see all of his transactions, and you're like, Jeff Bezos is buying like, same thing he's buying. That's interesting.
Yeah, so it's very open, and I don't understand why all these politicians are like, Bitcoin is used for drugs. I mean, I think back in the day it was, and there are websites out there where you can mix your Bitcoins, like you deposit your Bitcoins, mix them up with Bitcoins coming in from different wallets, so you can't really track where the source it came from. But that one I won't get into because that's I
was gonna say, like, I'm slightly.
So if I were to send my Bitcoin to you, right?
Yeah.
And if I view your wallet address, I can see where you got the Bitcoin from, and I can see that you got it from me.
Okay.
And then other people can see where I got my Bitcoin from, because it's always, every transaction is stored on the blockchain.
So this is the way it currently is, or this is
the way it currently is. So I can see every previous transaction.
But you're kind of saying as if someone could almost guess, like if you sent me, say, Bitcoin, because you know my wallet, you can. I'm just maybe I'm a little.
So you see, on the website, if I type in my wallet address, it'll show you what I own.
Yeah.
And it'll also have a history of all the transactions. So like if you look at a bank account statement, it shows you all the transactions you made, right?
Yeah.
On the websites, it'll show you the transactions you made and where, if somebody transferred coins to you, where the original source was from, where that original wallet source was from.
Okay. Huh. So using that, you can kind of figure out. I mean, I feel like it's a lot harder than.
Yeah, you can trace it back to the original source.
Okay, that's interesting.
Definitely, and there's also a transaction. They call it hashes. I think it was hashes, but if you click on that, it'll show you how much fees you paid, which miner node or miner pool is verifying your transaction, how long it took to verify your transaction, all of that.
Huh.
How much Bitcoin is in circulation.
So it shows everything. Like it
shows you everything.
Detailed.
Yeah. So Satoshi's wallet address is on there too, and nothing has been moved
really
since the creation of Bitcoin. So he might be dead. Who knows?
That is interesting. Wow. Huh.
It's very open, very transparent.
We'll see. Pardon me.
That's if you have your own wallet. So if like Coinbase and well, yeah. So some centralized exchanges, they have everything in one wallet, as their pool when people are trading coins and stuff.
Okay.
So I don't really mess with. Whenever I purchase coins, I put it on my personal wallet versus leaving the coins on the exchanges, because exchanges, they hold the coins for you and you don't own your wallet because you don't know the private keys. But once you have your own wallet, you own your private keys.
Okay.
So essentially you become your own bank. And that's this whole reason why I got into crypto is for that.
And I was going to say, speaking of kind of being your own private bank, I think if you don't mind me asking, I do want to talk a little bit too about, you said you're no longer, I guess, working full time with a company or wherever you were working before. I'll just say that. Now you're just doing crypto full time?
Yeah, I'm not trading crypto or anything. I'm not a day trader, because every time I buy something, it goes the opposite way.
Shiba Inu, Dogecoin. What's going on?
Yeah, so I actually participate in a lot of staking.
Okay.
So that's where a lot of my current income is coming from.
Okay,
Is
that's
from
really cool.
staking. And there's something like, I fell really deep in the rabbit hole. And, there's a term called degen yield farmer.
Degen yield farmer.
Yeah. Degenerate. Yeah. So basically, there are really high yield interest bearing protocols you can participate in on the blockchain. So Ethereum actually pays out 5% per year on your node. So Ethereum right now is $4,000.
Okay.
So in order to have your own full node, you need what, 128K? 128, way more than that. It's
how many are in a node?
32 times 4. Yeah, it's about 128K.
Yeah.
Or something like that. So you need 128K to run a node, and you get and your incentive to run that node is 5%. They pay you out 5% in ETH.
Jeez.
So 5% of even 100K per year is $5,000 a year.
Yeah.
That's better than a bank account.
Yeah, that's much better considering bank accounts. You lose money.
That's considered. That's also, assuming ETH stays at $4,000 or above, you get paid out, more than $5,000 per year just by running a node.
So as the price increases, the payoff is also
as a price. No, it stays the same. The APY fluctuates depending on how many nodes there are.
Okay.
So if there are more nodes, you get less APY. If there are less, so if there are less nodes, you get more APY because they try to incentivize more miners to come in.
Okay. That is interesting.
So
128 to get a node though. That's high barrier to entry.
Back when it was, so even just a year and a half ago, I think to own a node it was only $3,200.
Wait, 30. Say that.
$3,200.
$3,200, like $30 to $100.
No, yeah, $3,200 to start up.
$3,200 now it's 128.
Yeah,
Jesus Christ.
But when the pandemic first happened, March 2020 was it? When everything crashed.
Yeah.
Ethereum crashed down to almost $80, I think. And
really? I didn't know this.
Right now it's $4,000. That's when I got in heavy.
I should have talked to you sooner. Oh my God, I wish I had known
this. It was a stressful time, man. I was like, man, this thing is crashing. What do I do?
Put all my money. No.
It was the best decision I've ever made in my life. Financial decision. Best financial decision. But yeah, so it costs $120K to run your own node. But I mean, there are pools out there where you can combine your money to buy a node. And that's basically what staking is. You buy the coins, lock it up, and you get interest off of it.
Okay.
Yeah.
Oh, I'm sorry. I was gonna ask. I'm just curious. What made you go from, I guess, your job to crypto? Because I feel like in general, to me, that's very like entrepreneurial. And to do that, like I don't know. When I hear people say like I had a job and I quit it to start this new thing, which I've done too, so I get it. It's just like you must be insane. Like I think
yeah. I mean, so when I told my parents, they were like, well, when I told anybody, they're like, "What do you mean you don't have a job?"
Yeah, like
so I was not actually very entrepreneurial back my college days because at that point in my life, all I was thinking about was trying to get a good job. And I did not understand the concept of debt and how actually hurtful debt can be, especially student loans.
Oh my God, don't get me started.
I had student loans. I had to take student loans to go to school. And my whole mission was to get a good job. And that's all I thought about. I did not know anything about finances. And I wish I did earlier.
Yeah.
And so when I started my job after I graduated, I still had no concept of money, really. No idea how to invest.
Mm-hmm.
And then I had a really good friend of mine introduce me to the Coinbase app. And I was like, yo, what is this thing? So I put like $50 in. And at that time, I was like, even $200 was a huge amount for me. $200 was something I did not want to lose right after college. And that $50, I know I bought some stupid coin, like Litecoin or something like that. I don't remember which one I bought. But that $50 grew to like $80. I was like, yo, what's going on? So I put in like...
Over how long? Sorry.
Like a month.
Wow. That's
a month, it grew over 50%.
Yeah, that's really good.
I was like, yo, what is this thing? So I put more money and just kept growing. And it kept growing. And that was like... I started putting in right before the 2017 boom. So there were like... there's this cycle, and there was a 2017 cycle where the same thing was happening. We were in a bull market in 2017. Literally everybody was talking about it too back then. Yeah. But most of the participants back in 2017 were just retail investors like you and me. There weren't any big companies or anything like now. Back in 2017 is when I started, and I was like, well, what is this thing? I still had no idea what blockchain was. I was just trying to buy coins that were that had the best market cap, that had the most people involved, most developers involved. And then everything crashed right after that. And then early 2018, I sold everything. I paid off my student tuition with that, and I didn't touch blockchain or crypto since in early 2018.
Okay.
And then middle of 2018, I was like, you know what? I'm not really interested in stocks because when I started working, I everything was an all-time high stocks. And I was really scared to get in back then.
Yeah.
And so I was looking into crypto again. I was like, you know what? Maybe I kind of want to start this thing back up again. I want to learn more about it. And then all of a sudden it just clicked for me. And so after it crashed, I started dollar cost averaging back in. Well, pretty much everything I had. I was earning. I was putting everything in 2018. I was like, man, this stuff is crazy. The things that it could do. And then middle of 2018 all the way through 2019, I was getting into it. There's a lot of innovation and crazy new stuff that was coming out. I was like, man, this is it. And I think it was because part of me was technological. Since I got a degree in electrical engineering, I was like, man, this stuff is really cool.
Yeah.
And I originally got in because the ability to be my own bank and the ability to send money to anybody in the world and the speed of the internet.
Yeah.
Though those two aspects were really fascinating to me back in the day. And that's what really pulled me in. I was like, man, this technology is cool. And then the pandemic hit. When the pandemic hit, and they started printing trillions of dollars, I was like, I'm really glad I got into crypto beforehand, because the narrative changed from being able to send money anywhere to crypto being an inflation hedge asset. And the fact that, a centralized current financial system is outdated.
Yeah.
That's what added to the fire of me pursuing crypto. I was like, man, this stuff is going to change the world. And conspiracy theories that we'll talk about later.
Yeah.
And I think the pandemic really opened my eyes into the crypto world more. I mean, I knew it was going to be innovative, but I know it was going to be innovative that fast.
Yeah.
And I didn't know it was going to, be an awesome technology that can compete with the U.S. dollar.
Yeah. I'm always curious to see what happens in the future with crypto in general and how it's going to affect different, I'll call them governments, I guess, around the world, just especially America.
I think it'll be a wake up call. I don't think it will ever take over the dollar, cryptocurrencies.
Okay.
Just because it's, crypto it's not anti-government. It just does not need a government to function. And the dollar is always the dollar. And I think it'll be a wake up call for the government, telling them, hey, we got a competitor now. How do we change our monetary policy to keep our dollar strong?
Print as much money as we possibly can.
But I think it's too late for that now. I think it's too late to change anything at this point.
For the U.S. dollar?
For the U.S. dollar.
Yeah.
I think it's going to inflate to infinity. Definitely not in like 5-10 years, but 30, 40 years. I have no idea where we're going to be at.
Yeah.
Betting my net worth into crypto.
Whenever I have conversations with friends, and again, I'm not I know very little about crypto. Conceptually I get some of it, but as you talk about nodes and mining and things like that, I'm not that deep into it yet. But whenever I look into it, at least Bitcoin, things like that, I always say I sense that I see people trying to trade Bitcoin. They'll buy Bitcoin. They're like, oh, it went up, I'll sell. And when it goes low, they try to buy whatever. I'll say I feel like Bitcoin long run is best used as a currency itself. I don't know if you agree or not. I would say like it seems like the best move is to get at least specifically Bitcoin to have as currency down the line, because inflation keeps. I think in the last year, didn't inflation go up by like, I forget the exact percentage.
Oh, I don't know about last year, but this year is definitely high.
Yeah, I think like the past like 2 years they've printed the most. I think they've printed. I heard something like 90% of all the money in circulation has been printed in the past like year or two. Something like that.
I think that's true. It's like 70 to 90% of the Treasury increased or printed, or the Fed or whatever, they printed a big chunk, like 70 to 90% of what they had in the Treasury just in the past year.
It's insane.
So I think it's tough to view it as currency because what Bitcoin's almost $50,000 right now. So if you want to buy, a loaf of bread, you're going to have to divide that by a lot. So it's kind of hard to give it an easy number to read. Otherwise, you're going to be like, hey, I want this bread for 0.00001
That's true.
Bitcoin. However, I think it's a really good store of value. Like a lot of people nowadays, when the narrative switched to an inflation hedge asset, it's essentially become digital gold. So I actually own physical gold and silver.
Okay.
That's my other portfolio that I use against inflation. But I don't think nobody cares about gold and silver nowadays. So only a small portion of my portfolio is in that.
I've been hearing a good amount of people, I shouldn't say a good amount, but like relatively speaking, a fair amount of people at least get gold. I've heard someone recently say they got silver. People are like, why you getting silver? It's like, why would you not? I don't know. It's precious.
Yeah, precious metals. Yeah.
Yeah, I don't see why you wouldn't get that. But
I mean, I think they stopped mining these metals basically because of the whole pandemic situation, and it costs more now to mine everything. But but going back to crypto, I think the narrative has definitely switched to Bitcoin being a digital gold. Digital gold, Ethereum, and all these coins. They're trying to be what Bitcoin is, but I think Bitcoin and Ethereum are the top two kings.
Yeah. Did you hear about Bitcoin City recently?
In El Salvador?
Yeah. I didn't look that deep into exactly what is going on. I've heard of some of the design, I guess, ideas and how they're planning on having like a residential area. I heard it's going to be like a circle or like an oval, and they're going to have residential kind of on the, I don't know. But what are your thoughts on the whole idea of Bitcoin City?
I think it's awesome that they're trying to go after that, because I think, countries outside the U.S., I think they can. So when I visited Costa Rica.
Welcome back, by the way.
Oh, thanks. When I visited Costa Rica, I realized a lot of their financial system overseas are a lot worse than the U.S. Whether it's countries dealing with really high inflation rates or their banking system just sucks, or everybody's still paying with cash. Crypto,
like physical,
physical
fiat
cash, paper. So crypto, I think, has more of an impact outside the U.S. than it does here, because of the utilities that this technology offers for people outside the U.S. So I think countries like El Salvador, I think this is their biggest way to becoming, to get up the ranking. And I think it's a smart way of doing it. Whether Bitcoin becomes a dominant force in their financial industry, I don't know. It also depends on the people, right? Because there's a lot of mixed feelings with the citizens of El Salvador.
Oh, really?
Yeah. But I don't know if they got paid to do it. Because there's a book that I read called the Hitman of the Economic something like that. It was a financial economic hitman or something
Huh.
I forgot the title of the book. Crap. But anyways, so I think that's my opinion. I think countries. I think there's they're being smart about
Kind of
trying to
getting.
improve their financial system.
Mm. Yeah, I've always, when I saw it, I wasn't sure exactly. I like I said, I didn't look too deeply into it. I just thought it was
Yeah, I didn't
interesting.
look too deeply into it either, but
I was wondering, like, is this them trying to catch up to other countries? I guess.
yeah,
To,
I definitely think so, and I think it has more of an impact, like I said, towards other countries outside the U.S.
mm. So speaking of countries, I do want to ask if you, whatever you're willing to share. I remember we talked before. You had an idea about a social
Oh yeah,
currency. I was curious to know more about that
So
because
there's definitely like a dark side of crypto, right? When with every new innovation, somebody can
find
use it
some way
as a weapon,
Mhm.
and so banks now are trying to. So let me get into stable coins first. Stable coins are coins that are always dollar. They're always pegged to a dollar.
Okay.
And what's awesome about that is you can utilize that over the blockchain network. So I can send you $20 worth of stable coins instantly if I wanted to. And now banks, but those stable coins are monitored on a decentralized network, right? But so like stable coins can be on an Ethereum network.
Okay.
And the Ethereum network is monitored by they're being verified by the nodes, the decentralized network, right?
Are you so sorry to cut you off? Do you use a stablecoin, I guess, just to make purchases, or is it something?
Yeah, so there are some applications out there where so when you're buying stocks in a broker, you're purchasing shares with US dollars, right?
Mhm.
But in the crypto world, there's something called, if you're not using Coinbase, they have something called decentralized exchanges.
Okay.
So Coinbase is a centralized exchange because you connect your bank account, you deposit US dollars, and you can buy crypto with your US dollars, and they hold the crypto for you unless you pull it out into your own wallet, right?
Mm.
But decentralized exchanges, instead of it's not owned by a corporate entity, really, and so it's basically a smart contract. So acting as an exchange.
Okay.
So I can plug in my wallet. So the Ethereum wallet can have a bunch of different coins,
Mhm.
and that operate on the Ethereum network. So stable coins being one of them. So if I have a stable coin in my wallet and I want to purchase, a coin that's being traded, I can hook up my wallet to that decentralized exchange, trade stable coins for that, because they don't trade fiat. They only trade crypto.
Okay.
So stable coins are useful that way
Mm.
on exchanges that do not trade fiat. They only trade crypto to crypto.
Makes sense.
And also, stable coins can be used for a bunch of different cool things. Like, for example, so Crypto.com app, if you buy stable coins and you lock it up so that they can lend it out to somebody, they actually pay you 10% interest off of your stable coins. So if I have 100K sitting around in Crypto.com app, lock up my stable coins, 100K worth of stable coins, they'll pay me out $10,000 a year in interest.
Really?
Yeah.
Why is that? What's just to like lend it out to people, or how does that work?
Yeah, so they lend it out to other people, and that's how they make money. So they either lend it out. So the same way that banks lend out money, right? Except banks pay you like 0.04%.
Yeah.
Whereas Crypto.com, they'll pay you 10% interest.
Huh.
But that's something to be careful of, because it sounds really Ponzi scheme, right? Like, how might you buy coins, lock it up on their exchange, and that's something why that's why I don't go with centralized exchanges like Crypto.com, because you can never see behind what you can never see their order books.
Yeah.
Because they're a centralized exchange.
Mm.
And so what if that 10% interest is a promise. It's not guaranteed. It's a promise. So,
that's interesting.
So going back to stable coins, what was your question?
It was originally, I guess, about how they function, because they don't increase or decrease, if I understand correctly, in value. They just stay. You said they're all $1.
There's another question. There was a question before that, and I had to explain what stable coins were before we headed into that topic.
I think we were talking about the social currency.
Oh yeah, social
thing we were.
Yeah, I think we were heading in that direction. The social currency. Oh yeah, that's right. That's right. So that's what stable coins are. It's pegged by dollar. It's operated on these blockchain networks.
Okay.
And now banks are trying to, like centralized banks here, are trying to mimic that, and they're trying to create their own stable coins, and they're calling it Central Digital Bank Currency, CDBC.
Okay.
Central Digital Bank Currency. That one's also pegged to $1. Except the network is owned by the government. So they can see whatever you're doing too. They're going to know who owns this wallet address.
Okay. So similar to the way, kind of going back to the whole Ethereum thing, you can see if you have someone's address, you can see their transactions. The bank effectively can do the same thing with your stable coins.
Yeah.
If I understand correctly.
So except the banks will own the network, or the government will own the network.
Okay.
The government will own the network. And so essentially it'll be, nobody knows how it's going to work. Mm-hmm. But in order for them to create these digital bank currencies, everybody's going to need a wallet. Mm. But the difference is that in a bank, your money is being lent out to somebody else. Mm. In your central digital bank currency wallet, you own everything that's in there.
Okay.
Does that make sense? It's like a checking account, except it's on a digital wallet.
Yeah.
And everything that's in there is what's in there. Like you own it. Nobody's lending it out to anybody like the banks do with your money in their bank, in their vaults. And so where the social, economics comes into play is that you may not be able to use these wallets as a regular bank account. Instead, they might use it as an emergency, like if the pandemic hits again, or if there's a bigger one that hits, or something, devastating happens and they need to give out stimulus checks. This might be a method of giving out stimulus checks because it's just a faster way of
delivering money.
Than through a
out a
bank
check
or sending out a check or sending out a credit card.
Okay.
And so, but the government controls. If the government controls the network, they can change whatever they want.
Yes.
Related to your wallet. So, the first, conspiracy theory I have is related to this because, let's say a stimulus checks go out. They give you $1,000 in your digital wallet and their central bank digital currencies. They might change the network protocol, or they might edit your wallet so that you can only use that money for certain things. So you might be able to use that stimulus check only for groceries, or something like that. They can do whatever they want because it's on their network. They own the blockchain. They own the transactions. They can change whatever's in your wallet.
So instead of being the kind of person who gets a stimulus check and you're just like, no, I'm not going to spend it. I'm going to reinvest it somewhere. I don't know. Maybe try to convert it to Bitcoin. I'm just making this up.
Yeah, they can block you from
Okay.
Yeah, they can block you. Or they may accept only certain transactions. So, let's say
That's fascinating.
So let's say you do get the $1,000 as a stimulus check in your digital bank wallet, right? And let's say the economy is tanking because something devastating happens.
Yeah.
They're giving out stimulus checks, but nobody's spending it because they're saving it because the market's tanking. They don't know what's going to happen. They want to have that security, right?
Yeah.
But the government doesn't want that. The government wants to prop up the market, right? And because they own these wallets and they can do whatever they want with it, they can essentially put a negative interest rate on your wallet on that stimulus check. So if you don't use it, the value, let's say, so in the regular traditional system, inflation is essentially like a negative, or not. It's not a negative interest rate, but inflation, you lose your purchasing power, right?
Yeah.
But negative interest rate, you actually lose the value of it. Actually goes down. So $1,000. Let's say negative interest rate is 5%. You have negative 5%. You have $1,000. You have $50 less.
Yeah.
In your bank account. So now you're left with $950.
Yeah.
So that's essentially what the government can do to help to try and encourage you to invest that money.
Basically,
they just
take it back.
Yeah, either you have to spend it and help out the economy, or invest in like stock market to prop it back up. And that's something I'm afraid of. That's like artificial. What is it? Artificially. I had a term. I had a term for it, but
it's like artificially stimulating the economy. Like,
yeah, exactly.
You're forced to stimulate the economy even when you don't.
Yeah, you're forced to
personally want to.
Yeah.
Yeah.
I mean, the stimulus checks that everybody received last year, you could do whatever you want with it.
Yeah.
But the next one, you may not be able to do whatever you want with it.
You get $1,400 and you look at your account. You're like, I'll save it.
Yeah.
A week from now, it's at $1,100, and you're like, wait a minute.
Exactly.
I didn't spend it. Where'd the other $300 go?
They can do whatever they want because they own their blockchain network.
That is.
They can put a negative interest rate on it. They can put an expiration date on your money. So if you don't spend it by the end of the month, it goes away, right?
That is terrifying.
So that's like kind of like the dark side. But I'm not sure if it will happen, because if there is a negative interest rate, I think people in America are going to go.
Yeah.
There's going to be a huge revolution.
Yeah. One would hope. I mean, I never mind. I shouldn't say that.
Yeah.
But
actually, yeah. Nowadays, yeah.
Yeah, but I'll cut that part out. That's fascinating. That's very interesting. That's a lot to process.
It's scary.
It's
scary. And that's like the dark side of crypto. But thankfully, there are ways to get out of that, and that's crypto, because nobody can own the crypto network other than the miners.
Yeah. I feel like we could go into like a whole, like I'm fascinated by crypto. Like I said, I know nothing.
There's
like,
so much, and like there's so much I can talk about for hours, and because every time I try to explain a topic, I'm like, oh wait, I need to explain.
Yeah,
oh, wait, I need to explain.
There's like a prerequisite you have to know to explain the next. Would you be interested in coming back on the show?
Anytime, man.
I will absolutely love to have you back on. I think
are
for now,
there any more things you want to talk about today?
I'll leave it at that last conspiracy theory. I think that's a good ending part, good ending point. But then I'll definitely have you back on. We can talk about more stuff. So I guess for anyone listening and watching, Andy, where is the best place for them to?
Nowhere. I'm keeping myself private. Honestly, I don't use social media. I mean, the only social media platform that you can find me on is Facebook or Instagram. So I'll have Lenny link my Instagram in the description or something like that.
Yeah, I'll have it in the show notes for the podcast, and on YouTube I'll have it in the description. So anyone
they can shoot me questions too if they have any for for crypto related stuff.
Be like, where's the best place to put my my currency?
Oh, this is also not financial advice. I don't want to get Lenny in trouble.
This is not financial advice. Yeah, we'll leave it at that. All right. Well,
make your decisions wisely.
I'm gonna put that disclaimer in the thing too. This is not everything you hear in this episode is not financial advice. Use the advice in this video at your own discretion. But yeah, well, I appreciate you coming on.
No,
Andy.
thanks for inviting me, man. I had a lot of fun.
Yeah, this is some great conversation. My brain is exploding as we speak. But
Mine
yeah,
too.
definitely looking forward to the next episode. I appreciate you guys listening and watching. I'll see you guys in the next video. Bye.
Thanks.